The Fed maintained accommodative language in its communique while stocks reacted positively to corporate earnings. Futures point to a flat open as the focus turns to jobless claims and very heavy earnings calendar. I'm Taylor Strantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Scott, I'm excited for today's call because we're going to talk about my 2012 sector pick and the tech space, which happens to be one of your favorite. We have Apple out of the way, the FOMC communique is out, so let's take a look at what's happened over the past 3 days in market action.
Well, over the past 3 days, we finally saw some constructive action. If you recall, we came in on Monday, we were definitely weak, we were coming into that low from April 10th, and we weren't sure how we were going to react. But the markets put a technical double bottom in, and since then we've had a nice 3-day move. So now the Fed's out of the way. We've seen so many decent earnings reports coming out, some good action. So now the question is, if we can go sideways, I think that this rally is going to start to continue and the positive tone will be maintained.
So being Thursday, we have jobless claims, which is always a very important indicator. We need to get those numbers back in line. They weren't that great last week. And we also have a slew of economic data on the calendar today. So Scott, how are we setting up our trading plan today?
Well, if you take a look at the chart of the S&P, you will see that we took back some of the moving averages. We talked trends. Here is the macro trend that we've been following all the way back since October, and we held it. Okay, I know right on Monday we broke below real quick and we held that 1357, that double bottom, that area where the financials finally woke back up. And then look at the last few days. We then reclaimed this trend line, and now we're coming into some pretty big resistance. I would think if we can go sideways for a few days and hold above, just say 1378 to 1382, the move above 1390, 1392 is going to be powerful. And that's an area that if you're short, you better make a decision whether you're going to roll it up or just cover and start getting back into some long positions, because I think some guys are already positioning long for what could be another move that's already underway.
Moving along to the sector spotlight, we're going to look at the agricultural space. My 2012 pick for the year, Mosaic, my top stock. They performed really well yesterday. We had Credit Suisse, Lazard out there reiterating the pricing action that we were looking for that's going to play out in the back half is really starting to come into play, and we expect to see some of these estimates come up. The long call version, we're going to look at names like Mosaic, Agrium, CF. But for the Morning Call Express, Scott, let's look at MOO. It was one of the best performing ETFs yesterday in the market.
Finally, some money started to rotate there. On the correction, you saw it hold higher, and then as the market started to respond favorably, it went alongside. So that's what you want to see. So if you look at the MOO, you will see that it held its support coming into the moving averages. It held above 50, and then yesterday it actually cleared this resistance where you saw it in the S&P. It did not clear that resistance. The XLF did not clear. The MOO did. So that means some money went into the ags. I think CF is best to breed. I like Mosaic. I like POT as well. POT did come out with earnings. It's down a little bit. I think it can be absorbed. If that goes positive, today that group should act very, very well.
Moving along into the trenches, we're going to take a look at large cap tech names that pay some real healthy dividends. At the Dow 30 stocks, 5 of them comprised of tech pay $16 billion in dividends. That's the largest weighting there. Well, with the exception of Exxon raising it last night. But, you usually expect the big oil names, the big consumer names to pay those dividends. But it really is with those tech names. Kicked off with Microsoft that started paying in January 2003.
Yeah, Microsoft was a stock favorite of mine going into the year. I said it could be frisky. People like, there's no way. It's been in a 10-year base. It had a nice move. It just pulled back and it's consolidating. I think Microsoft is something you could have in your portfolio. I think Intel is something you could have in your portfolio. You look real quickly at Microsoft. Stock just had a nice gap up with earnings. It actually came out and people weren't expecting much and it did well. I think if Microsoft starts to get back above this 33 area, which is resistance, you could see 38 to 42 this year on Microsoft.
And to round it off, quick hits for Kit Cash in the long call version. Scott, let's take a look at Apple.
Apple yesterday gapped up about 50 points, and what I like to do is I like to see after earnings, I want to see a few inside days. You now have a range to trade against. 606 on the downside, 618 on the upside. I think with a few days worth of action, you will see that Apple could trigger a more macro move. If you go to the chart, this is very big resistance coming in right around this 620. So I would say let's measure how much of this gap it holds. Traders will be watching the 606. It could pull in even a little bit more, maybe down to 595, but if it could hold the majority of this gap like it did down here after the last quarter, look what happened. So let's look at the action close. Just don't overtrade it right now. It needs some time to consolidate, but that report was unbelievable.
All right, we're going to have a busy day on the tape, guys. Don't forget the end of the day. Scott and the team wraps up the charts on T3Live.com, real money and options profits.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.